What's going on YouTube? Hated back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. As you guys know, today is Sunday, which means markets typically don't move on the weekends here. S&P is obviously closed, and Bitcoin, Ethereum, and XRP really have not seen any movement yesterday and most likely today. And we're probably not going to see any movement until this week, which is quite interesting. Now, yesterday I made a video basically talking about the GDP data coming out and trying to find that date. I was right partially, but the GDP data I believe is coming out July 28th, as you guys can see here. And it says that July 28th announcement of Q2 GDP will not mean recession. So it's an interesting article. We're going to talk about this a little bit later in today's video. But with that all being said, we are going to be looking at the consolidation that's forming within most of the major cryptocurrencies. Sideways consolidation means uncertainty, which typically has pretty substantial swings. So all this information will be later on in today's video, so definitely stay tuned. But with all this being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So first things first, let's do a quick refresh of top 10 cryptos. Markets are actually doing pretty well. As you guys can see, we're at 1.04 trillion, and as you can see here, 7 days we're up 5% for Bitcoin. Ethereum is exploding, up 17%. Cardano's up 16%, and that's pretty much it. Most of the other cryptocurrencies are pretty much consolidating for the most part here. XRP still one, even with all this crazy stuff happening within XRP, we're still a number 8 token, which is incredible. Like all this nonsense and crazy stuff that's come out with XRP, we're still trading at number 8, which tells you that it's pretty much here to stay. I mean, there's a lawsuit going on and they're still doing really well. So pretty crazy. Through a recession, it's still trading very, very, very high. It's one of those OG cryptos that have pretty much proven that it can handle, itself during recessions and during major bear markets here. But really what I want to look at is this article here. I find it quite interesting. We definitely have to talk about it. But it says the U.S. economy has clearly slowed from its rapid 2021 growth. Obviously, we're not dumping money into the economy. And there are plenty of reasons to fear a recession sometime in the next year or two. Now, even if reported GDP shows 2 negative quarters in the first half of 2022, the NBER committee is very unlikely to conclude that the recession started in the first quarter, which is interesting because that's kind of what recession means. Second quarter recession means we've started in first quarter, and this is important because it would honestly outline where cryptocurrency would be moving to. And typically when you get a confirmation of a negative quarter for the second time, you usually start the recession from the beginning of the first quarter, which would be January. But as you can see here, we could have a situation on July 28th where the public and the markets, responding to media headlines, think they've been told that a U.S. recession began in the first half of the year, which would be true, only to be told the opposite 2 months later. On July 28th, the U.S. Bureau of Economic Analysis will release its advanced estimate on economic growth as measured by GDP in the just completed second quarter of the year. The announcement is attracting more than the usual eager anticipation. The reason is that many observers predict the Q2 GDP number will be negative and will officially confirm that the economy went into a recession in the first half of 2022, figuring that growth in natural output is already determined to have been negative in the first quarter. After all, isn't a recession defined as 2 consecutive quarters of negative growth? Yeah, we get this. That makes sense. So we know that it most likely will be negative. Some people obviously say otherwise, but we won't know until I think 5 days from now. 4, 5, 6, 7, 8. 4 days from now, we'll know if we're in a negative recession or negative second quarter. Do 2 quarters of negative growth define a recession? Typically, that's what it go by, but it's not always true here. I just want a little more information. We're not really getting that. But it's saying, thus we could have a situation on July 28th where the public and the markets responding to media headlines think that they have been told the U.S. recession began, only to be told the opposite later on. I guess they're saying it could come and it hasn't actually hit just yet, so people might be confused. But obviously there are all implications to this, and we won't know until later on how exactly this goes. But they're saying if we confirm that a recession is happening, and we've started one, that, they might think, oh, it's over now, or we're moving out of it, and it could really last even longer. But as you guys know, if you watch my other YouTube channel called Hayden Schreier, which for those that don't know, I'll just pull it up. I do have a second channel just dedicated to finance here. As you can see, you just type in my name, and this is my second channel. We talk about these financial situations here, so definitely make sure to check this out. But we talk about things as to why we could last longer. Recessions can typically last 6 to 12 months. That's usually what happens after, after World War II. all the recessions we've had last about 6 to 12 months and recover out of it. So it's necessary. We haven't had a recession in about 14 years, excluding COVID, the pandemic, but otherwise we are doing pretty well. But this all comes down to how it affects the S&P 500. Economists believe the S&P is going to head up 10%, maybe 9 to 11% the next 2 quarters, third and fourth quarter. We've already consolidated it quite a bit for second quarter, which is really nice here, and hopefully we can continue to head up higher. This will ultimately influence these other cryptocurrencies to see a similar move. And what I mean by that is the consolidation to the upside. Typically within these bear markets, what we have, and I'll just reference Bitcoin for you guys. What we usually have is, we'll go back to 2017, 2018 here. So we have the major bull run. There's like 3 different courses that happen. Bull run, we have bear market, we have a kind of like middle ground right here, and then we have the bull market again. So you can see the first thing we have is the bull market. There's 3 phases: bull market, bear market, kind of this uncertainty and consolidation that we have here, which typically has a pretty high level retest, followed by, once again, a retest of all-time lows, and then we enter the same pattern here. So you can see, if I just draw it, we have the bull market, we have the bear market, and now we're looking for the third phase, which would be this right here, which is this kind of consolidation, which would allow prices to ultimately maybe swing up, retest about 40K, come back down, and then move back on. We're going to see, ideally, something similar to this. And we can go back here next year or 2 years from now and quote myself here, save the date here. But typically what we see within these markets long term, and this is kind of the plan that I believe is happening here, we have a bull run right here. This is phase 1, 2, and then we have 3. So we had 1, this is 2, and now we're looking for 3, and then to repeat itself again. So first phase is bull run, second phase is bear market, third phase is consolidation, and then we reverse back into first phase bull run, second phase bear run, then we have the consolidation again. So truly, I do believe that we are now pretty much out of that bear market, and we can time ourselves here. You can take the price or the date range here, and we can time ourselves from like bottom. I'd ideally say it's about 65 bars. We could even scale it out a little earlier, maybe 53 bars. We put this over when the bear market started to drop. And I mean, it depends on where you'd like to really put this here. Typically, I mean, we saw 2. So I think it's like the start here or even at the end. We're pretty close to filling this out right now. We could see a lot of just sideways consolidation moving forward. But currently, we've only traded about 37 days. We could be seeing 50-ish. Or we could be out of it now, depending on how you start this. Some people are starting it from here, and then you'd say, okay, from its peak, or from pretty much this bull market, we're now getting closer to the end here, which would be currently trading at 74 bars. So I don't know how you want to wrap your head around it and call the top here. But ideally, we've been trading. We could play conservative and say 37, which is a couple more weeks. And you can see what happened during this couple more weeks is consolidation. If we take it from the top and we just put it here, it's 50 bars instead of 68. So if we put it again, you saw we're at about 37 here until we started to consolidate. And that's ideally what we're kind of seeing now. We retested oversold. We peaked oversold. That's really the marker that we're looking for here, is when we became oversold on the weekly, not necessarily the consolidation in the length of it, but ideally kind of both. We kind of have to get some sort of fluid, similarities here. But once we peaked oversold, that's how a lot of people go about this. Once we retest the oversold levels after consolidation, that typically marks the bottom here. So once again, retesting the oversold levels, and now people are starting to imagine that we're going to start to trend kind of sideways or head back up. And I do believe we hit a bottom here, which was the previous all-time high. I don't think we're going to be heading lower. I'd be shocked, but most likely we'll probably see some consolidation at, up to this level right here. I do believe we will retest moving average, because typically when we break below this weekly moving average, we do head back up. So weekly, a target is closer to 30K, if not up to 40K here. That's target. I'd be shocked if we headed up higher, but ideally it would be something like this, consolidating down, and then we'll have the second or the next halving, 2024 Bitcoin halving. I just want to show you guys how perfectly this aligns here. And I'm sorry I'm not talking about XRP as much, but this ultimately does influence XRP here. So Bitcoin halving date, you can see here, is in 620 days, so April 4th of 2024. So let's pull this up here just so we can see how this is aligned. April 24th of 2024, where do we go? January, February, March, April. It's actually quite early if you ask me. That's actually pretty incredible. Much earlier than I had expected. This is where the halving is. You can see, we'll go back again. When was the 2020 halving? Let's find the date of the 2020 halving. It was 2020. Third halving was 12/5. It's December? No. Let's see when the halving was. May 2020 was the halving here. So we'll go to Bitcoin here, and we'll pull up the halving in May of 2020, February, March, April, May. Was right about here. So yeah, no, this is pretty accurate actually now that I see this. So you can see this is kind of the outline that I believe we are going to see. Is we had our bull run, and I'll draw it in a different color for you guys. We had the bull run to start. Then we had the bear market. I'm going to draw it in like purple just so we can get a better look here. So let's go to like purple here, and now I'll show you. So first run is bull market, second run is bear market. We have consolidation, and then we do the same thing. Bull market, we're looking for bear market now. Now the second thing, we already saw the bear market. We're looking for the third phase, which is consolidation, which hits a high, comes back down to lows, and then you can see after the halving, we start to rally up. So we're looking for after the halving, maybe something like that is the next wave. So we're now going to see this right here, which is going to be kind of this weird market where we are going to see prices go higher, ideally, but we are also going to come lower. So we might ideally see some movement like this and then come back down, followed by the halving in April of 2024, which is exciting. And I apologize for, spending all this time focusing on Bitcoin here, but ideally this has a very big impact on cryptocurrency as well. So ideally, now that we've hit a bottom here, I do strongly believe Ethereum will start to pump up, and I believe XRP will also start to pump up. So, again, short term, we're waiting for breakout, breaks within this resistance here, breaks within this resistance, and here. But that's pretty much it for today's episode. With that all being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and I'll see you in tomorrow's video. Peace.